Hello and welcome. Thanks for tuning in to the Mid Show here on NDTV Profit. I'm Harsaita. With me is my Mawad as well as Puneet Javeri. And we're going to speak with a couple of very interesting managements. First off, we have with us Somany Ceramics. Now, soft quarter for ceramics. Of course, it's been a soft quarter overall for the entire building materials as well as the real estate market. But nonetheless, how is Q2 really shaping up? Going to be interesting to watch out for, because some bit of turnaround will obviously give us a better footing with regard to the rest of FY25, but H2 is something that we'll also discuss. So let me quickly welcome on board Abhishek Somany, MD and CEO at Somany Ceramics. Sir, talk to us. It's been a softish Q1 quarter. What's transpired? And Q2, you believe there's going to be a bit of a turnaround. How do you see Q2 playing out?
Yes, Q1 we've already discussed earlier. It has been soft on various grounds. There was elections, etc. And Q2 also with the excessive rains across the country, which really affects the building material sector. Building material comes to a reasonably kind of a halt while it's raining. So it's also again been obviously better than Q1, but it's still a softer quarter.
Mr. Somany, in terms of your segmental revenue breakup, from what I understand is in Q1, ceramics was down around 4%. PVT was flat. However, the GVT segment did see a 33% YOY growth. So I want to understand that going forward, what will be the segment breakup be like? Because you're expecting better quarters going ahead. So what will, augur that growth? From which segment will it come from?
So structurally, what's happening in the ceramic tile sector, ceramic being a larger word, GVT, PVT, all of that is ceramics at the end of the day. But in the Indian parlance, when we talk of ceramics, which is the basic wall tiles, floor tiles, and PVT is the polished vitrified tile and glazed vitrified tile. So structurally, glazed vitrified tile is becoming more of a fancy of the market, both in terms of fashion, in terms of size, also in terms of designs. It has a lot of flexibility on all those three grounds. So therefore, going forward, GVT will be the sector which will keep gaining ground. PVT would remain kind of flattish, and ceramics would remain again a little plus or minus, but ceramics may grow because in ceramics also we are now making larger sizes. So ceramics and GVT would pull the company. The PVT segment would be kind of flashy, and that's happening across the world. It's not only in India. It's a phenomena which is happening across the world. To make an analogy, I think it's how the television sector has gone from a CRT to an HD to an QLED, etc., etc. So therefore, that's the kind of transition we have towards GVT.
So Somany, good morning. It's Puneet here joining in as well. Now you have mentioned that Q1 was impacted due to various reasons, elections, monsoons, as other reasons as well. But you have guided for a better quarter two specifically, which will also lead recovery in the second half of the year. Because it is a monsoon quarter as well. So what's leading this particular growth for you specifically?
And I also it's not a very large growth. It's a very small growth. I mean, it's going to be a growth considering we degrew in quarter one. So from that point of view, it is better, but it is still quite sluggish. Again, it's to do with absolutely crazy rains across the country and flooding, etc. So we do believe that H2 onwards things should be better. But I am quite sure that the quarter two will be a reasonable bit better than the Q1. But no serious green shoots in the quarter two because it has been inundated. The whole country has been inundated with rains.
Now, just one follow-up question on this, because specifically, in this particular quarter, you also mentioned that the Morbi players had just, come to an agreement for reducing the inventory. Now, specifically, any particular reason that you decided to do it in this particular quarter, and what is the current inventory picture going in, the second half of the financial year?
No, I never mentioned anything about Morbi and their inventory. I think you've got it wrong. But yes, if you've touched that topic, but Morbi, a lot of the plants are shut in Morbi. Generally, they're shut towards Janmashtami, so that has been the same phenomena. A little extra has been shut this time because the exports, which is Morbi's biggest revenue generator. So exports have been hit for Morbi specifically because of the issues pertaining to freight which is absolutely skyrocketed. So therefore, the exports are slower. The trajectory for exports were approximately 1,700 crore rupees a month. And I believe in August, it was down to about 1,300, 1,350 is what I've been told. So I have not seen those figures, but I've been told it's down to 1,350 crores for the month of August. And it's slightly more than that in the month of July, but way down from 1,700 crore rupees of run rate.
So is the current inventory then specifically from quarter 1, has it been run down a bit, or is it at a manageable level right now? If any kind of quantification that you can give us?
As far as we're concerned, the inventory levels remain pretty much the same as what it was quarter 1. Obviously, capacity utilizations get affected. So beyond the point, it's a product which you can't keep more inventory of. There's only X number of space in the warehousing. So I think we've been able to balance the product, the inventory, and also our capacity utilization.
All right, and
I'm
Mrs.
not
Right.
about what the inventory in Morbi is, though.
All right, and Mr. Somany, you are recovering from lows of that exports, and since you've said that monthly levels of exports will be roughly 1,700 odd crores, so I want to understand that overall, what is the kind of export growth that you're expecting this year, and in terms of the breakup of revenue, how much is exports and how much is domestic, and I believe that exports will be more margin accretive for you. Then I want to understand the overall impact on margins.
Okay, sorry, I think you've got me wrong. So as Somany Ceramics, most of the leading players in India are not very export focused. So we are still 96, 97% consumption of our production is in India. I was talking about Morbi. Morbi has a very large export. About 40, 45% of Morbi gets exported. And that has slowed down from the 1,800 crore rupee run rate to 1,350 crore rupee run rate right now. We were expecting that to be a 2,000 crore rupee run rate. But there's been the freight rates have absolutely skyrocketed because of the geopolitical reasons, which was unexpected. So therefore, Morbi is under pressure as far as export is concerned. As far as Somany is concerned, we're not under any pressure on exports because exports was very minuscule part about our revenue. So that's the clarification I have. And exports are not more margin lucrative. It is almost at the same margin as India. Like I said, we are very, very small in exports. We only export the mid end and the upper end of the segment, unlike Morbi, who export a lot of the low end and also the mid end.
Point taken, sir. I want to try and cover volumes and how volume is shaping up, because Q1, possibly softer Q2 from what you are suggesting or what
Much
you were
better
expecting.
than Q1 for sure.
Yeah,
Much better
for sure. But softer than what you were expecting, Mr. Somany?
Absolutely.
Yes. So would you therefore maintain the volume of 10%? At least that's what you guided for full year FY25. Would that still continue to remain?
Yeah, so I had guided for a reasonable double-digit growth. So obviously, because of the Q1 and a softer Q2, I mean, we'd need a reasonable amount of growth happening going forward in in H2. So obviously, that's going to be impacted. But I do want to keep the commentary where we should be able to do a double-digit, very, very high single-digit, because H2 we do believe should turn around in a very, very positive way. I mean, buildings are getting made, real estate is in a boom. Tile is the preferred material, which will go into every building. It's no longer stone and wood and all of that. We're replacing a large part of that segment. So there is no reason for tile not to march ahead in the future.
Okay. And with regard to, sir, realizations, I'm going to club a couple of questions here. One is with regard to realizations, where should top line therefore be at, and margins, would they also sustain double digit like they did last year?
It all depends on capacity utilization and how much we are able to sell. So obviously it will depend on how the the H2 goes. But yes, if the capacity utilization is at the level which is it at now and a little higher than that going forward in H2, there's no reason why that should not happen, because the input costs are at check. You have seen crude falling down, which means that gas also should be under check going forward. So there are no surprises on the input costs on any of the fronts, be it gas, which is our major input, or be it any other raw material. So with input costs being at check, it's only a question of selling more and utilizing the capacity more, which is a big spoil spot as far as style is concerned. Capacity utilization is paramount for us.
Mr. Somany, point well taken. So capacity utilization as well as gas prices under check will be a couple of things that we'll watch out for margin specifically. I just wanted to address one small segment which you've entered, which is the bathware segment over the last few quarters. Now we've seen a lot of competition coming in from not only tile players, but we have a couple of paint companies who've gotten into bathware. We have a couple of plumbing companies also that have. So just wanted to understand your outlook for this particular segment as well as for the industry. Do you see a lot of competitive intensity as well?
Yes, so this industry is unlike the tile industry. There are fewer players. Small scale is not that large in this industry because the brands are visible. So there is obviously the consumers more clear as to which brand they want. But yes, you're right. There's been more intensive competition with some of the paint players and some of the other plumbing players and pipe players which have got into sanitary ware. The segment is clearly heating up. We are approximately at the 300 crore rupee revenue, give or take a few crores, which means that we do have a head start, and that's our products are set. It's not an easy product to set in the market. Our distribution is set, but I think going forward, the issue now is, when you think of tiles, you think of Somany, but when you think of sanitary ware, you're not thinking of a Somany sanitary ware. You're thinking of the other top 3-4 brands which are available in India and some of the global brands. So that's something which is a headwind for us as to where to, cross that bridge. It's not going to be an easy one. A lot of branding, a lot of distribution. So I think currently going forward, our product is in place. Our production is in place. We have capacities. We have excess capacities in both those segments. It's a question of now getting our distribution and widening and deepening our distribution as far as sanitary ware and bathware as in bath fittings is concerned.
Right.
So
Okay.
it's doing well.
Right. Okay. Well, Mr. Somany, thank you so much for giving us those insights, and thank you so much for taking our time and speaking with us at NDTV Profit.